Modern CPA. Our purpose is to provide valuable information to small business owners. On our podcast, Profit Points, we discuss business how-tos, give tax tips, and dig into real-life experiences in the crazy world of running your own business. If you find this podcast helpful, then like, subscribe, and follow us on social media. Welcome, everybody, to Profit Points. We are a podcast that talks to professionals, industry experts, and other small business owners, learning about the crazy world of business. And today we are talking with Bobby White, and he is from a bank that does SBA loans. And we are going to talk a little bit about all the things you need to consider when you have an SBA loan. Bobby, welcome.
Thank you. Thanks for having me.
So what bank are you with, Bobby? Tell us a little bit about what you do.
Yeah, so I am with First Colonial Community Bank. We're headquartered in Cherry Hill, New Jersey. We have been operating for the last 21 years. So we have everything from SBA, products, conventional products, kind of you name it, all kinds of different deposit account options. I'm actually in the Limerick branch, so we expanded into
Limerick, Pennsylvania. Yes, exactly. So some people may be hearing this maybe in different states. So
yep. So I'm in Pennsylvania, Limerick, Pennsylvania. We're right off 422. We opened opened the branch in March of 2021. So we're coming up on our first year. So I can't believe how quick it's gone.
Yes.
So
you've had a lot of changes in the SBA world and a lot of people getting SBA loans. So I was hoping that maybe you could tell us a little bit about what an SBA loan is, first of all, because I don't know that some people may not even know that it's available and what it actually is.
Yeah, so the SBA has definitely become more well known now that PPP is over. They were kind of handling the PPP program, which they allowed the banks to fund. So now everybody has heard more about the SBA. So the two loans that we primarily focus on are the 7A and the Express. So the 7A program, both of which are essentially they're guaranteed, certain percentages of the loan are guaranteed by the federal government. So it allows banks to do loans that they wouldn't be able to do conventionally, whether it's due to collateral shortfall, maybe cash flow isn't perfect. Still has to be a good loan, but we get a little bit more freedom in those kind of scenarios.
So SBA, it's set up for small businesses, right? I mean, these are like loans that the government is trying to help give a leg up on that small business.
Exactly. So kind of the requirement, I guess, or the definition of a small business, it has to be under a certain number of employees. Kind of the assets has to be under, it can't be a large company.
Got it.
Can't be, like Coca-Cola can't go and apply for an SBA loan type of thing. So have to be in business, in the, United States.
Got it.
And it has to be an operating company. So you can't SBA will not finance any investment opportunities or anything. It has to be a loan to the small, operating company. Business
owner operations. Got it. Understand.
Yeah.
So how is that different than, different than the regular conventional, what we say is conventional loans, or what people normally think of like going to a bank and getting a loan?
Yeah. So there's a couple different, purposes for conventional loans. If you're going to do something investment, it's, somebody's buying a piece of real estate and then they're, probably renting out or leasing out different, spaces within that real estate. So The difference is the operating company is not occupying the real estate.
Oh, I see.
It's renting it out, so they're generating or they're receiving rental income.
That would be investment, right? That would be more of an investment instead of housing the actual operations.
Exactly. So then if you do have, somebody that's occupying the space, the loan, they look at loan to value. So the loan to value is going to be way less on a conventional product than it would be an SBA product, because we can do generally, 90% financing. Depends on the exact,
the
use of funds, but the kind of primary rule of thumb with SBA is 90% financing, unless it's for, debt refi, working capital. We do short-term, long-term working capital. And then sometimes you can get into real estate, with no money down. So hopefully that's helpful.
So you mentioned the two types of SBA loans. Can you talk about those?
Yeah, definitely. So the 7A program is designed for real estate purchases, business acquisitions, debt refis, equipment purchases, inventory purchases, that based on the use of funds, that kind of determines your term. So on like a real estate purchase, you can actually go out 25 years, 25-year term, 25-year AM.
And you mean amortization?
Amortization.
Yep. Okay.
Exactly. So there's no balloon, whereas that's another difference with a commercial, conventional loan. They usually do, I think, 5-year terms. So you always have a balloon at the end. But that's one of the benefits of SBA is, it's fully amortizing. So the Express program is more, we use the Express program for like line of credits, for, short-term working capital needs. So we've seen, recently we've seen some requests for working capital, just kind of as people get going again after COVID. Depends on the industry, but we've seen some of those requests come in, and they're much shorter terms. An Express line, you can borrow and pay back, and then pay interest only for up to 5 years, and then your second 5 years is principal and interest, on whatever you borrow. So a total of 10-year term. The 7As, like I was mentioning, was if we do like a debt refi or equipment or, inventory purchase, you can go up to 10-year term, 10-year amortization. So you'll never have a balloon, which is nice.
That's good. So you know exactly what your payment's going to be. You're prepared, and there's a set time that it would be paid off.
Right. Yeah. So, and then the general SBA loans, they are variable rate.
Got it.
Okay.
You can request a fixed rate. They're just not as prevalent.
So for people who aren't sure what variable rate is, basically a variable rate means that it can fluctuate with the, the federal federal interest rates. So it will fluctuate based on that.
Yep, exactly. So they're priced using prime. So Wall Street Journal prime plus a certain percentage. And then that'll, can fluctuate. Prime hasn't changed in a while. I think they're probably expecting it too soon, but nobody really knows,
Yeah.
The rates were probably it absolutely depends on the deal. But you're anywhere between, I would say up to prime plus 2.75.
Okay.
So there's usually room, below that is where you normally fall. But it depends on the deal, obviously, credit, cash flow, the whole thing.
So give me an example of somebody that a business who has gotten into an SBA loan, what they've done with that. Like, what is a great example of that? Do you have one?
So I just did a debt refi, which they've been coming up a lot. I think what happened was people were going out and getting hard money loans.
Okay.
Just with COVID being around, I think just the uncertainty of just wanting to have that cash on hand. So what we've been doing is, taking that debt, as long as you can verify that it was used originally for an eligible purpose, which would, mostly be business related. As long as you can show that, we look to refinance it, no money down. So it's, you take, the last one I did was about 430,000. So it was 400. There was 3 different vendors that we paid off. This company used the hard money lenders for to purchase inventory.
I see.
The hard money loans are quick too. So it's nice because this particular company received them because they had to make quick orders for inventory, just with the supply chain issues and stuff. So we were able to refinance all those into one loan, save the borrower like 10 grand a month just in cash flow. Yeah.
And the rates and cash is king. So king or queen, whatever you want to say. Yeah.
Right. Exactly. And a lot of their payment terms are weird. So they would do, not weird, but they would do like, would be charged weekly or bi-weekly, and they would just come in and start taking money. And it's like you never generate or you never kind of accumulate enough money to become stable that way. Whereas, you pay it all off with the SBA loan. Like you said, about what your payment is every month, and then that frees up some cash for other things for you. That's probably, most frequent at this time, other than, commercial real estate purchasing requests have come in, quite frequently. We're seeing that.
Yeah.
And like I said, you can go out 25 years.
Yeah. I had a client who, it's 2 ladies who own a massage practice, and they purchased the building that they are in and operating their business out of. They were renters and decided that they wanted to purchase the building and get a little more roots and also, have some net worth, and build some net worth. So they purchased the building that they were in, and they used an SBA loan. So I think it worked out really well.
That's a really good scenario, especially when they're already there operating. They know, kind of the expenses that they're going to encounter. That's like a really good, reason for an SBA loan. And then you're developing, building your equity in the property versus paying rent. And a lot of people, because of how crazy the real estate market is, a lot of people we're finding are selling. Landlords are selling to their tenants, who usually always get first right of refusal. So works out really, really well. And then the other SBA, another purpose we've seen is doing like renovations. So, you buy the piece of property but you maybe have to convert it a little bit or replace a roof or, do something like that, and you can build all that into your loan, and it's all financed over that 25 years. Which
that
is cool.
Really helps. Yeah. Rather than buying the building and then, having to come up with the money to renovate or get a separate short-term loan or something like that to help finance that.
Exactly. Yep.
Wow. That's good. That's really good.
Yes. Oh, I'm sorry.
I was just going to say, like, kind of what's the process that a business owner has to go through in order to apply and hopefully get the SBA loan?
So it is, it's a little bit more documentation than it would be a regular conventional loan. Just because you got the bank's requirements and then you have the government's requirements. Which kind of, usually overlap, but there's some specific SBA documents that you have to get. The biggest one that comes to mind is the 1919. So that's kind of the request for information. There's the section 1 is for the business, where list out, name, the tax ID numbers, the number of employees is big. And then you kind of, certifying that you haven't had any bankruptcies or felonies or, pending litigation and that kind of stuff. And then Section 2 is the same thing, except on the individual owners. So anybody with 20% or more ownership or any key employees, everybody has to fill one of those out. So that's kind of I would say the biggest SBA document that has to be filled out. Oh, and then all your normal stuff like prior years tax returns, business and personal, and then any affiliates. So SBA defines an affiliate as common ownership. So if you're the owner of the company that you're looking to lend to also has ownership in another company, you have to get all the tax returns just because it's a whole big, you got to create the whole big picture.
Yeah.
Now this part of 2022, we are requesting full year 2021 profit and loss and balance sheets, which can be internally prepared. A lot of times we refer people back, work with your CPA to get that kind of stuff.
Right.
They're really good at putting those together. And then personal tax returns, obviously 3 years. And then we rely on projections. So we ask, some of our all of our borrowers to put together projections, kind of 3 years going forward.
Got it.
And then, business plans. Depends on the actual use of proceeds. I mean, sometimes it's specific. I mean, if you're looking to refi debt, you have to have copies of your existing transcripts, with the payment transcripts with the lender, copies of the notes that were signed, because a big thing with SBA is eligibility. So you have to make sure that the request is eligible for SBA financing. So,
I understand.
So it's a lot of documents, but there's always between the the lender, the CPA, and or borrower's attorney, there's always somebody able to help.
Yeah. I do know that it does require some effort on the part of the operating company or the owners of the company. It can be a little tedious to go through that process, almost the same as like buying a house or buying refinancing a house. There's a lot of documents that they request for underwriting, and this is no different, I would imagine, right?
Exactly.
Yeah.
And it's we've even, so SBA, you can lend to startups, startup companies, which is really cool. So pretty much as long as we'll look for experience,
right.
So you have to have some
industry experience
in that.
Yeah.
Exactly. And then we'll use projections to kind of base our cash flows, and if everything makes sense, it's a great opportunity for people to get into, go off on their own. If you have somebody that wants to start their own practice or office of some kind, so that's really cool.
Yeah. So you mentioned about the business providing financial information and profit and loss and things like that. Does the individual also need to provide like a personal financial statement? Like what are the assets of the individual? Like, does that come into play with this?
It does. There's a liquidity test that we have to do. It depends on most time I haven't worked with somebody who had too much money for an SBA loan.
Too much money.
Because it is the threshold is kind of high, but there are certainly people out there that wouldn't qualify for that reason, but
wow, lucky them.
I know. Right?
Yeah,
I know. So, but yes, absolutely. I should have mentioned the personal financial statement is definitely right off the bat, automatic, need that for the, even to issue a term sheet, really. You have to have, and from there, we're looking at, personal liquidity, obviously, personal income, and then personal assets. So a lot of times, not a lot of times, but depending on the deal, sometimes if the loan is not fully secured with, commercial real estate or business, assets or whatever, a lot of times the SBA, they're going to request or they're going to require that you pledge, personal real estate or investment something to make up the difference if it's available. If it's not available, then that's one thing, and it's okay. But if it's available, they're gonna have to have it.
They could potentially ask for it. That guarantee.
Right. Exactly. So that kind of just throws some people off, but we like to tell people up front about it, so it's not a surprise.
Once they do that and they put up a personal guarantee, is there a time period where they can go back and kind of wipe that out once maybe the loan has gotten to a lower level, or is there an opportunity to kind of move that away?
Yeah, so a personal guarantee, no. But if the guarantee is secured by like a piece of real estate, if the loan amount drops below a certain, dollar amount, and the loan becomes fully secured based on something else, or there's something that they would like to, swap collateral for, then you can look to make the request to SBA for, for that to be released. But the personal guarantees, for any, 20% or more owner, they're on there till the end.
Yeah. So you can't just go if you want an SBA, you can't just go to SBA and get this loan. You have to go through certain banks, right? Like, how does that work?
Yeah. So if you go on, we participate in the SBA lender match. So if you were to go on the SBA website, that you can kind of type in what you're looking for, and then based on the area or state or the anticipated use of funds, they can, kind of line you up with a bank that, has that opportunity open. So like if you have, if you're looking to purchase a piece of real estate, you go in, you fill that out, and then the SBA sends that to any bank that has, kind of
the capacity to handle that, or the
kind of signed up for that, and then you have the opportunity. So it's kind of, there's a lot of banks, I think, that are involved in that. So you're kind of, you're always competing, but at that point it makes it nice for the customer, because then, you got banks competing for you.
Sure. Well, I think it's key to make sure that we highlight that not every bank is going to be a participant in the SBA. So like your local credit union may not be part of all of that, and you may need to branch out and find a different bank to work with for this.
Absolutely. Reason. Yep, that's a good point. Definitely. Yeah, and even some of like the larger banks, I think, it's definitely not every bank has it. Some, some do, some don't, but
yeah.
How do you guys differentiate yourself from other banks that do offer SBA? Like what are some of your positives with working with you guys?
So it's nice with us. Everything is very, we're all kind of in one location. So it's super easy to just walk next door to your, the SBA director and ask, questions if we have an appetite for something, or if, whatever you need, you have it, and it's very simple to get. So we do kind of our process, which it might be, similar, might be different than other banks, is we'll collect, do a very high level review of the request, run quick cash flows, look at personal financial statements and stuff, and then, instantly run that through our team. And then, if everything's all, great, we can issue a term sheet, usually same day or day after. Depending on the size and request and everything. So we're very quick, it's all, and, we do everything in-house, which is nice. And then as soon as the term sheet's, issued and then agreed upon, we're able to put it right into formal underwriting. So we have an underwriter in-house. We've got
Wow.
the loan processing department in-house, closing department in-house. So it's all all the departments are very close to each other, and it's usually very seamless. So
so it makes it a lot faster than
right.
for the person trying to get the loan. The whole process seems like it might be smoother.
Yes, for sure. So that's one, that's a benefit. Because a lot of times when you start talking to somebody about an SBA loan, they're like, oh my gosh, this is going to take forever. And sometimes it does.
Yeah, just depending on the deal, right?
Yeah. Sometimes, because there's, if you're buying, it depends on the deal, but if you're buying like real estate, then you have appraisals and environmentals that you have to get. And, you're working with a title company and, business acquisitions, you're dealing with sellers, you're dealing with valuations. So sometimes, it takes a while. And, usually.
But that would take a while regardless of the bank you went to. So, but just the process, the process within your organization seems to be, like you said, much more seamless. You guys are all working together, pretty closely, and you can kind of get these deals done in the fastest possible way you can, depending on the deal, right?
Right. Exactly.
Yeah, that's great. Yeah. So, any tips that you would maybe give to the small business owner looking to do this? I mean, you had said about going to the SBA website and putting in what it is that you were looking for. That's a great tip, like that they can go and look at what banks have the ability to, provide them that service. What other things would you suggest that a small business owner looking for an SBA loan should do, maybe to get prepared?
I would say, allow some time. Like, don't go to the lender and then expect to close, 30 days after, just because there's a lot that has to be done, leading up to that close, leading up to the approval, and then leading up to the closing. But just kind of give yourself time. I would say, the more organized the borrower is, usually the easier it is to transmit documents and information. Not that you have to be perfect, but that usually helps speed up the process. And just kind of know what you're looking for. And if you're not, then you always you have lenders and different organizations you can reach out to for help, putting together business plans and projections and that kind of stuff. So it really is a very cool program that's available. So
I think that it is so helpful. I think it really helps that again, what it was designed for, that small business owner looking to either start or expand or be in a better position overall, and where they may not have been able to get conventional loans or have been denied other conventional loans.
Yep, absolutely. Yeah, and we get a lot of internal referrals. We're working with the conventional lender. So if they have something that they're working on that they come across, maybe not enough equity in the property, or cash flow's too tight, like I mentioned, or credit's not perfect, then they, we kind of refer deals back and forth. Because I did get a deal the other day that was, it was like 50% loan to value, and it was in business for a long time. So I ended up giving it to a commercial relationship manager. So it worked out. But they're definitely a good program.
That's awesome. Sean, you look like you're going to say something. Was there something you wanted to say?
I had a question or a thought, but then it escaped.
It zoomed right out.
It's gone.
No problem. Yeah. Well, I am so glad that Bobby was here to be able to help us with some of this and explain, what's out there for people to take part in if they need to. And there's a lot of things that are out there to give people a leg up. And so,
yeah, definitely. Thanks so much for having me.
Absolutely.
Thank you, Bobby. Yep.
Yeah. We look forward to hearing some of the responses from people about, what they've learned on these podcasts. So we appreciate your time. Thank you so much.
Cool. Thank you, guys.
Thank you.
If you find this podcast helpful, then like, subscribe, and follow us on social media.